Good morning, Carl. Appreciate being here. We did have a terrific quarter, and we're particularly proud of the fact that for the second quarter in a row, both of our brands beat their competitive sets. They gained market share. And for the first time since, I'm sorry, go ahead.
I was going to say the comp alone at IHOP, 40 is pretty eye-popping. It's ahead of the category itself. What do you think is going on specifically with trends at IHOP?
So for IHOP, its growth has been accelerating, and it's really benefiting from Americans beginning to return to normal. Our weekday breakfast is now at 2019 levels. Our weekends are at 2019 levels. And because of the labor shortages, which I'm sure we'll talk a bit about, in the next few minutes, we've got some late night evening hours that are not yet staffed. And that's what's lagging. But Americans have returned to breakfast and mid-afternoon during the week and on weekends, and that's what IHOP is benefiting from.
Since you brought it up, the labor component and some of the day parts that are difficult to staff, I mean, what happens in those cases? Are you, in fact, shutting some restaurants for a certain number of hours? And then do you think there's a wage out there that will bring people in? Because it's obviously been tough.
Yeah, Carl, the labor issue is probably the number one issue, I'll tell you, that keeps me up at night. And it's really tough because it puts so much pressure on our servers, for example, who have to cover extra shifts or cover extra tables. The hours that we can't staff directly affects, the profitability and the revenue of our franchisees. And so nationwide, across both IHOP and Applebee's, we're at about 85% of being fully staffed. And that's unchanged from the prior quarter. Most of those hours tend to be the late night hours for both IHOP and for Applebee's. And so we're doing two things. We're being very realistic about the short term and investing in recruiting and, most importantly, retention. But at the same time, we're beginning to ask ourselves, is this the new normal? And are these levels of labor and the difficulty in attracting team members to our restaurants and restaurants in the industry, is that what's going to look like for the next couple of years? So, we're beginning to invest in and study things like robotics and AI and other operational efficiencies so that we can plan for the future as well as what we're focused on right now.
That's a really interesting point that you make right there, John. And it raises the question, what do you think is causing the labor shortage right now? What do you think your biggest competition is for those workers in this economy?
Yeah, Maureen, that's the million-dollar question, right? Is because we assumed that perhaps when the federal stimulus ended, that workers would come back. That hasn't happened. And so that's why we're beginning to think this might be a long-term phenomenon. And what I tend to think has happened is that during COVID, when people were furloughed or had more time on their hands, they rethought their careers. Some of them have gone to Amazon warehouses. Truck drivers who were 55 or 60 years old have decided to retire. The Gap or other retailers have raised their wages. So it's become incredibly competitive as people have rethought their careers. And that's why we want to make sure that we're not caught flat-footed and we're thinking about the long-term implications of what we're seeing.